Hi guys, this is Mrs. Benjamin. I'm going to be taking you through the Chapter 14 problem set. We are doing a worksheet for a merchandising business. We've done worksheets before. We were just doing them for service businesses. And there's just a couple of new pieces of learning. Hopefully you've got a good introduction through that when you're doing your exercises. This first problem, we're going to be doing a worksheet with a net income. Okay. I'm going to go ahead and make this a little bit bigger and close out the instructions, but you can follow along with your directions or page 549 in the text. And we're going to start by completing the adjustment columns of the worksheet, which is really probably the hardest part of doing the worksheet. So here we have our worksheet, and the first step is to deal with merchandise inventory, and that's the new piece. We haven't had merchandise inventory, but we're a merchandising business, so now we're having to deal with the merchandise inventory. So the first adjustment, what we need to do is we need to remove this beginning balance in merchandise inventory. So since this is a debit, I'm going to credit merchandise inventory for the $25,000, and I'm going to debit income summary. See if I can find that. There we go. Income summary is just a clearinghouse account that we're using. And so now I have my adjustment to remove the beginning inventory. Okay, I've got my debit and my credit right there and there. Okay. The second step is to put in the new inventory. So once they do a physical inventory count, they tell us that the ending inventory is $35,000. So we're going to put that in. And we are going to debit the merchandise inventory, and we're going to credit income summary for the ending inventory. Okay. And what you'll see is when we get to the point where we're doing the adjusted trial balance, the 25s will counter each other out, and we'll end up with that new ending inventory balance of $35,000. Okay, for our adjusted trial balance. And this is what I call the X effect, right? You take out the old, you put in the new, and that really is the new piece of learning for this worksheet. And this is the only one where you're going to have two items in both columns. Before I forget, both of these get carried forward, which is the only time that that happens as well. You usually just have the balance carried forward. But income summary, both amounts get carried forward. We're up top here, just the balance. Okay. All right, so that's A adjustment and B adjustment. C adjustment is nothing new. We're just adjusting for supplies used. We started out with $8,000 in supplies. They tell us we have $3,300 remaining. So they are giving us our ending. So we subtract the $3,300 from the $8,000 to get an adjustment of $4,700. So we have used up $4,700 worth of supplies, and we are going to expense that down below here to supplies expense, $4,700. Remember that every adjustment has to have a debit and a credit. There we go. All right. The next adjustment is for unexpired insurance. Okay, so we've got our prepaid insurance. Unexpired would mean that they're giving us the ending balance. So the $3,800 is the ending. We subtract that from the $54. We have used up or expired $1,600 worth of insurance, and that's going to go to insurance expense down below. So I've got my debit to insurance expense, my credit to prepaid insurance. The next two are depreciation, and they're a little bit different. We don't have to subtract. They just tell us how much the depreciation is. And we always want to be careful we don't use the asset account, but we use the contra asset account. So accumulated depreciation for the building, they tell us is $2,500. Okay. So we're going to go down below, find the expense account. and debit that. Okay. And then we have the store equipment is $3,500. So go down below here. And the next one is unearned rent. Now this one is a new one. We haven't dealt with unearned rent. It's very normal for businesses to collect rent in advance. So unearned rent, it says the ending balance is $4,500. And so that would make our adjustment, unearned rent, let's see, let's go up here. Sorry, I need a mouse because this is, I apologize. Where is my, there we go. We have $8,900 and that's a credit. And so they're telling us that the ending balance is $4,500, which means we have used up $4,400. So notice that I have to debit this one because we're dealing with a revenue. Okay, and then down below, we're going to put that to rent revenue. Or, yep, there we go. What was that, 4,400? And that is going to be a credit, not a debit like the other one. So it's kind of backwards. The last one is for wages, and we've done this one before when we were working first semester with a service business. So these are wages that the employees have earned but not yet been paid. So my wages payable, it's a liability account. And they're telling us we have $800 in wages. So I'm going to go down here, find my wage expense. And I'm going to debit wage expense. Okay. All right. So now that the adjustment, I think that's, yeah, those are all of my adjustments. So what I need to do is I need to add up all my debits and my credits in my adjustment columns. So I start with my $35,000. And I'm going to add $25,000 and $800, $4,700, $1,600, $2,500 plus $3,500. I got $69,900. See if that's right. Ooh, let's try adding again, Lisa. 35. I think I missed the 4,400. Okay, and then I'm going to add up all my credits. So 25, 47, 1,600, 25, 35, 800, 35, 4,400, and I should get, they should equal each other. That's a good time. All right. So next, I'm doing my adjusted trial balance, which is just adding the trial balance plus any adjustments. If there's no adjustment, you're just pulling it from the debit to the debit. Okay. And so the 14 just gets pulled over. We've already done this one. We added the two debits, subtracted the credit, get the debit balance. I've already done these two, so now it's just pulling the debit here and the 50,000 here. Now we've got 20 and 25. Notice they're credits, so make sure you move to the credit side. This should be 22,500. All right. I've got 35 plus 0 is 35. I've got 14,000 plus 35. I've got 17,500. Got 9,600. I've got 0 plus 800 is 800. And then I'm just bringing the 59 over. I've already done this one. Mortgage payable. All these liabilities are credits because that's where the normal balance is. And my drawing. Notice that we leave both of those in. That's unique. We haven't done that before. Okay, now I'm going to my revenues and my contra revenue and rent revenue. 0 plus 44 is 44. Okay. Going into my purchases and my contra. Make sure you get the contra on the right side. I got 2,104. Oops, that's a debit. It's easy. Check your work frequently. It's easy to get these on the wrong side. And then all my expenses will be debits. So I got 32 plus 8 would be 32,800. Got 3,600. 4,700. 1,350. Got 8,000. 1,600. All right, so I need to add up all my debits and all my credits. This is going to take a little bit, so I'm going to pause this for just a second. Okay, so now I have added up all my debits and all my credits, and I get 331,810, and those two equal each other. All right, the hard part's done. Next, I have to take my adjusted trial balance and determine, does that amount go to the income statement or does it go to the balance sheet? Remember that assets, liabilities, and owner's equity, including drawing, all go to the balance sheet because that's the financial statement that they go to. And then our revenues, expenses, and our income summary, notice that both of those get carried forward to the income statement columns. So I also like to use the income summary as kind of a dividing line. If it's above income summary, it goes to the balance sheet. So you're just copying these amounts over here. If it's below income summary, they go to the income statement. Remember that income summary is the only one where both numbers get carried across. And then we find our net income when we're done. Remember that these don't match up. And in a net income situation, the difference is going to be in the outside columns, and the difference between the 160,600 and the 114,710 is 45,890. And the difference between the 217,1 and the 171,210 is 45,890. Notice they're the same. And when the difference is in these outside columns, that represents a net income. Remember, you have to write the words net income. We then add that in, and it makes these two columns equal and these two columns equal, and we are completely done with this worksheet. Okay. You will need to journalize then these adjusting entries. So the 25 and 25 is your A adjustment. So your debit is to income summary and credit to merchandise inventory for your first journal entry. Okay, so we're going to look at what that looks like. So you got income summary, merchandise inventory. The second one is your merchandise inventory. The second one, the 35, notice the debit is to income summary, so that has to go first because you journalize your debit first. So that is going to be your second entry in your journal. So merchandise inventory for the 35 and the 35.